a market that was going up like this, and we had a series of predicted lows. The pink line represents the predicted lows. I should have mentioned before that the gold line, the orange line, or gold line probably is a better color, represents the predicted highs. So we have a situation where we'd want to keep a stop at least below the predicted low, which is the pink line, and just kind of ride it up kind of as a trailing stop, as you might do. Then what you can see is that as the market moved up, we got to the point on January 12th where we had a price predicted low rather of 81.57, and that means you would enter the trade at 80.57, or get out of the trade rather at 80.57. If you look at that market, pretty nice gain. Now, the question is, would you have gone short at that point, or would you have just gotten out of the market and kind of ride and see what happens? That would probably be a personal decision, but if you did stop and reverse, you can see what would happen if you had a trending move to the downside. A couple of things that might have encouraged you to take that move, if you'll look down here at the predicted differences, you'll see that the blue line did cross the green line, which means that the upward momentum had started to shift away. The trend had gone from up to down, started to weaken. It kind of like waffled a little bit, went over sideways, and started to turn down, which could encourage you to get into that market as a potential trade on the downside. Although, as I say, you don't sometimes like to make two decisions to go from long to short all in one fell sweep moment. But that's kind of one of the things you'd have to look at. A point to look at also, as you're looking at the more current situation, today's situation, is to look at this spot right here where you do have a predicted difference crossover. The medium term has moved above the longer term. Is that an early indication of a turn in the market? That potentially could be. If you look at where we're at today with the current situation as it is, the predicted high on this particular day, and we're looking here at the very far right edge of the chart, the predicted high is 74.71, so that means that at 75.71, somewhere right in here is where we would want to have our stop. If we're short, we want to get out of the trade at that particular position, because that the market is liable to turn. It's going to run out of steam, as the predicted differences suggest, and so we want to get prepared for that eventual turn in the prices. The other thing that we need to look at is that we now need to go back to our screen and to see on our vantage point screen to see exactly what would that have meant for the particular trade that we're talking about in terms of dollars and cents, and whether we would have been able to make a nice gain out of this or not. The prices, and remember we talked about we were going to get in at the level of 72.55 where we were going to buy, and we're going to trade out. We're going to get out of that trade at roughly 80.57, get it about in the right spot here. We're using our opportunity calculator here to indicate what would that trade have been worth had we done that, that particular trade. The opportunity calculator shows us, that, and this isn't exactly precise, but that in 17 trading days, the market gave us approximately a little over $8,000 on that particular trade for a full-size contract. You might prefer with your account to trade the mini contracts and trade several mini contracts as opposed to a full-size contract, because the full-size contract does have an initial margin of $5,400, or that's approximately what it is currently anyway, whereas the mini contract has a margin of less than $2,500. So depending on the size of your account, you might have preferred to take the smaller account and then trade a few more of them, until you get to the size that you want, that one that you can handle with the account size that you have. Now we're going to take out this line, and this is oil. We've talked about, this is a physical commodity. This is more of the future side of the thing, but there are some other opportunities in the oil market if you follow along, and if you note that we have several, I can't even tell you how many, exchange-traded funds or ETFs that are focused right on energy. We're just going to look at a few of them and show you kind of what the pattern is for the longer period of time. The first one is XLE, the energy sector spider. The point here to note is that we have, and I'm not going to analyze this one a whole lot because it's going to apply to some of the other stock situations that we're going to talk about in a little bit. But note where we're at from a pricing standpoint, that it has gotten, it was up at about $60 thereabouts, a little bit higher than that. We have in effect, a double top. Also, when you look down here, when you move the mouse down here a little bit, you'll see that there's a low in the vicinity of around $54, $55, and that's kind of been the trading range that we have been in, since October. So we've got kind of some history here that's building up for this to move sideways. Now the question, of course, always is, will it break out to the upside, to the downside? And that's the thing we're going to try to analyze and see how to trade it. If you look at some of the other ETFs, we have here the oil service holders, the OYH, the symbol. Similar type of a situation, although the high over here was the recent high was a little higher than the previous high, but you have a situation there, again, where you'll note that it's kind of like a double top. We have kind of a bottom forming, and if you'll notice on the predicted differences down at the bottom where we have the crossovers there, at the current time, the predicted difference has the short or the medium term has moved down, but has now started to move back up. So the question then is, as usual, is that the sign that the market's going to move back up? What we'll hope to capitalize on. I'm going to show you a little bit more on how that potentially might be traded, but I want to show you one more ETF and talk about that. Again, the same type of situation that you'll see with iShares, the S&P Global Energy Sector, symbol IXC. Again, see a double top, which kind of forms a little ceiling a little under 38, and you see a bottom at where very much right at today or yesterday we've gotten down to that bottom in the area of 34. We can't obviously look at all of them because there are quite a number of potential trades. If I had more time, what I might do is I might go through and say, okay, let's go through scan for opportunities and pick out some of those that look like the best opportunities from Vantage Point's perspective. But again, that would take a kind of a webinar in and of itself to kind of look through those possibilities and see where we're at in the energy sector. Now we're going to switch over. We're going to try to look at some of the energy stocks. We can load those up quickly to determine some of the stocks that we're going to take a look at. And you'll notice as we go along, as we look at some of these stocks, that they have some similarities, some differences, and we're going to only focus on a couple of the majors because